Alright, welcome back to another episode of my trading vlog. Today is going to be a big one. I got some charts to go through. Oh, we've had some news, I'm sure you've heard. It's getting very scary out there. What's it mean for the markets? It's hard to say. I'll talk about that a little bit, and we'll go into what may or may not happen. We'll kind of do a bull and a bear scenario. I'm pretty sure it's not great. Pretty sure it's not great. But we're just going to have to wait and see. First thing I'm going to do is just do a little bit of like stream stuff. I need to get a little I need to like actually pull the chat up. The chat doesn't really work, this chat function that is supposed to be in OBS. I don't really appreciate that. I know you're getting my you're also getting my system noises. Oh, look at this. How about we do this, and then I go to YouTube, and I'll select my view my channel. Nice, and I'll watch my thing muted, and then I can see the chat there. Perfect. Okay, and then we'll turn the stream quality down so it doesn't take up any resource. I just want to see the chat. And we're going to turn on some lo-fi, because that sounds relaxing, and that's what I want in my life right now. It's stressful out there. So much going on. But the sun's out today, at least here where I am. And that's nice. I went for a walk. Oh man. There are so many things outside of our control. And just gotta breathe. Just breathe through it. Inhala. Exhala. And we'll get through this. Nothing's new. Nothing's new. Yeah. US, of course, participating with Israel, bombing Iran. Really bombing Iran. A lot of stuff online. A lot of the online communities are really worried that we're going to see a big downtrend because of it. And yeah, news events do tend to coincide with these sorts of moves in the market, and sometimes it's hard to say which came first. Yesterday, I was telling you I was waiting for the market to come down. I was like, this looks bad. And so what I did is, I went looking for my Elliott wave book, and I couldn't find it, which was frustrating. So I got an audiobook. I don't suggest getting an audiobook to study Elliott wave theory. I just had to listen to the author say like, wave 1 up, wave 2 down, wave 3 up, wave 4 down. It was like, oh my god. And so yeah, don't do the audiobook thing. It was good though. I was able to get a lot out of it, because there's a lot to Elliott wave analysis that I actually don't really have internalized very well, or need to correct even in some instances. I'm pretty good, obviously, but it doesn't mean like I'm an expert. Like I didn't write the book. So I want to go over some of the stuff that I picked up this morning and apply it to my SPX chart. I happened to pick up my SPX chart from like years ago, and I looked at it, and oh my goodness, it blows my mind. So we're on a weekly time frame. I think we're actually gonna go monthly here. Yes, aggregation period, month, interval, all time. And then I have a chart drawing set called Wave Primary Plus. Now, there's a note up here that says based on this figure. This is out of a book called Elliott Wave Theory by Frost and Precher. I really highly recommend getting that book and reading it. It goes through all these things, and there's a couple of different like figure notations here. These are all straight out of the book. This isn't even like me making this up. This is the experts saying this is what the counts are and such. And then this big blob up here, we'll zoom in and get into there. This is like the more recent analysis, and it fits that this high we saw is a B wave and a corrective trend. We've already seen the first downtrend. There's another point in time where we've seen this same type of correction, and I'll get into that, and it's scary. But we'll get into it. We're gonna go way back. Elliott, the guy who came up with Elliott wave theory, he took even the 17th century and prior into account when he was making these counts. You know, the Industrial Revolution obviously producing a massive motive trend of progress in the upward direction. I want to start back here. Yeah. So 1928. This is perfect. So he contended that the actual top of this motive trend was December of 1928. So that would be right there. Okay, that's the wrong tool. Oh my goodness. That would be right there. And that's clearly not like the top of that chart. It's not at all. And that's okay. This creates an irregular corrective cycle where A, B, and then you start this. Look at the C wave. Look at that C wave. That's the 1930s crash of the Great Depression. And it starts just like that. We're going to look at this a little closer just so we get an idea of what it looks like. And so I'm going to take, I don't know, we'll go from March of 1928 and we'll look through just the top through here. So we'll go through 1930. I'm going to go custom time frame. And I said 1928, and we're gonna go from, this must be American, so we'll go March in the first column there, and we'll go through, we'll just say March of 1930, and okay, alrighty. I lost all of my, oh right, these are only closing prices. This is an important thing. Data, information in trades in the stock market has changed a lot over the years. Electronic trading has been a phenomenon. Now, beyond electronic trading, bots trading is a whole nother level of messed up. So we gotta bear that in mind when we look at these old charts. Yeah, on the daily, there was just a closing price. And so I zoom in on a line chart and now it looks normal, right? Because that's what a line chart is, it's based on the closes. Okay, so where is December of 28? It's back here. Somewhere in here we called the top. Somewhere in here, it's probably this. Boom. A, and then he called this B. He called this a B wave. It's probably this. And it went, wow, it really, look at how exuberant it was. Let's add another layer of amplification here. 200% at 3130, topping out right above there. Incredible. December of 28. You'd think it would have been like, yeah, weird. And then bam! And so that is a super irregular high. That is just, you know what, let me double check. I actually was in the car listening to this. I downloaded the TradingView app just so I could chart on my phone. I've got a pretty big phone, so I can do that somewhat reliably. And let's see here. Is this the chart I was looking at? Yep. And I marked it right here. Yeah. See, look, this is my phone with a big, I can do this on my phone. It's really nice. Okay. And so that's the top. And so A, because this is 1, 2, 3, 4, 5. That looks like the top right there, right? And the authors do note that at one point, Elliot called that the top. He did at some point come here and say, hey, the top's a different spot. Regardless, the point is that in this irregular top, this is a B wave. That's B. Now, zigzags, this is what a normal correction looks like. A, B, C. What we're looking at is A, C, where C just like crushes the market and B sets a new high, which is so annoying. Haven't seen it since the Great Depression. Are we gonna see that again? Ugh. What can I gather from this chart that looks relatable? A peak, a weird sideways grind, and then what looks like a beautiful motive trend. And it's because it's wave C of B. That's so confusing. A, B, C, C. So in this case, wave A was really short, time-wise. Wave B extended a long time. Who's to say wave A wasn't irregular in and of itself? Maybe A had A, and then A of B. Oh my God. And then B of B, and then C of B, and then wave B, and then C. So it could have been A, B, C, finishing wave, A, B, C, and then wave C, and so wave A ends out here. Oh, that's tough. So basically what I'm thinking is this is what wave A looks like. On a higher wave degree, all right, and I'm going to have difficulty here. I'm not going to notate it correctly, but I am going to notate it to illustrate what I'm talking about. Illustrate. So we got A, and when I make it yellow, it means it's on a smaller wave degree. So A of A, and then duplicate this, and now we have B, and then C. 1, 2, 3, 4, 5. Oh, that's actually really clean. We're gonna duplicate, edit, C. That's wave A. And how did we come up with this count? Well, we said this arrow right here, this point had to be the top of a motive trend. And if wave B is going to set that new high, to say that we had a big flat correction like this, to say this was all corrective, this actually makes a lot of sense. A, the top of B, and then C. Wow, and the target still hits. I'll take away the 161.8% extension. Amplitude of the first wave down to A, to the top of wave B. Yeah. That's so weird. It's so irregular. Look how choppy price got here. And then this is, we'll make this resemble the corresponding wave degree above. And it's important to note I'm not annotating these per se correctly. What's interesting is this kind of looks like this, where B set a new high, and then wave C. Wave C here wasn't that severe. Incredible. And wave C through here looks like some sort of flat, by the way. Like, see how that's a reverse triangle? Tricky, very tricky. A, B, and then 1, 2, 3, 4, 5 for C. And that 335 is wave A. And I say 335 because wave A was 3, and then wave B was 3, and then that triangle is 5. And that gives us this funky thing. And you know what we'll do? Is we'll leave that there, and we'll extend this to the right. And that looks a little better, right? Anyway, now I've got that figured out. Look at wave C here. We're gonna duplicate this, pull this down. Whoops, did I duplicate? No, I just activated duplicate drawing and then pull it down. And we'll go down a little bit like this. Switch my chart drawing. Can you see that? Yeah, you can. And we'll make this C. And this was the Great Depression, or the crash of the Great Depression. And we can chart this too. And I'm sure a lot of people have charted this, and it looks pretty simple, to be honest with you. Hard to say. We'll just start. Again, I'm not going to use the right wave degree notation, but it's okay. 3, 4, And this is like 3 waves. I have a really hard time calling that 5. 1, 2, 3. Oh, I'm sorry. I didn't label wave 3 correctly. 3, and then 4. We'll call 4 A, B, and C. So it actually A, B, and this. So this would be a nice clean downtrend. So we can actually see 3 waves in 2, and we can see 3 waves in 4. And 4 was sharp compared to 2, which was kind of like flat-ish. We're gonna try to use some Fibonacci extensions here, figure out if we followed some. I mean, that was nope. Wow, that was a crash. We went from 31 down to 17, so it was like a halving of the market. Half of the market's value just like disappeared. Poof, gone. Wild. When I say poof, gone, it's like it's some net zero, whatever. The value just doesn't go away. Someone had it. What happens is smart money sells out, right? And they may even sell it with profits. Meanwhile, everybody else starts to lose value. And it's like, if this is your retirement fund that they're taking that value from, that's bad. That's real bad. And that hurts. Does real damage to society. Let me finish labeling this. We're going to call this wave 5. And we're going to put the parentheses over here. And this, I want to remember, right? Because we had an irregular top where wave B set a new high, and the crash that followed was devastating. And now we're going to look at the recent high and my recent analysis, and we're going to start building out from what I was doing before. And so let's go through here and have a look. I used to take like, subscribers' names and put them on the board. Stevie, Tim Sketchy, Edward Smith. And so I'm going to start breaking this apart little by little. Top of wave 3 through here I think is pretty correct. Oh my goodness, I should have just pulled up 20 years of data. I knew better. So the peak of wave 1, you can barely see it. 2, 3 of super extension. Yeah, okay. 4. And then we're looking for 5 of wave 3 of this wave degree. And so super extension. Is this the super? What's the new one? So it goes cycle, super cycle. What's primary? Super cycle. This is supposed to be primary cycle. Primary wave 3, correcting into primary wave 4, and then extending into cycle wave 3 up here. I'm just gonna go with that. And then I called it cycle wave 4 sharp. And if I do that, I'm looking for a motive trend through here. Okay, so everything I said yesterday about SPY does need to be corrected. And that's why I'm doing this. It still puts that high, what we've seen recently, at wave B. And I'll explain how we get there. But we're going to clarify a lot. And we're going to do it right now. All right, so cycle wave B. What? That's got to be... Oh, wow. I used correct annotations. I don't remember them because I don't have my book. Frost and Pressure had a different way of doing it, and I needed the book. So these wave degrees are going to be difficult for me to pick apart. I'm going to do my best. Maybe that'll help you as a viewer understand. So I've got capital letters for the corrections with a little circle after them, and that's how I used to show that was the highest of the tier that we were currently on. There's nine different wave degrees. It goes sub minuet, minuet, minute. That's like I said, a 3. And so I'd have the sub minuet, the lowest level there, labeled with like no parentheses, no circle. And then the next wave degree up would be minuet, and I would label that with parentheses. And then when I got to the minute degree, I would put the circle at the end. And the idea was that you would circle the letter actually, but Thinkorswim doesn't have that annotation, which seems dumb. Like you'd think they would. Everybody else does it, but it's just not part of their menus, unfortunately. I'm sure I could custom something. I could custom load some code in there, and they'd be happy to give me that. But whatever. We're gonna keep going, and so we know this is the top of a degree of sorts, and it's not gonna be supercycle. So it goes sub-minuet, minuet, minute, minor, intermediate, primary, and then cycle, supercycle, and I think grand supercycle. I think. And so I'm gonna run with, we're in the top 3 tiers. This is called the charge as primary plus. And so if this has an O, this must be right below whatever this intermediate degree is. Let's figure this out right now. For lowercase c. This is a big wave C, so I'm looking for the top of wave 5, building into that blue 3. So this blue builds into that blue 3, and then we're looking for blue 4. Okay, and blue 4 had A, B, and C, small letters. Okay, and then that C had, so this is the top of the, so this has to be cycle, right? Because it goes minor, intermediate, primary. So these are primary waves. The smallest wave we have shown is primary, and that's what's in white with the circle at the end. Okay. Oh, wow, hard. So there's little A and B and C. These are intermediate, and then this is cycle. Right? Minor, intermediate, primary. Minor, intermediate, primary, cycle. So cycle, primary, intermediate? No, this has to be the top of one of them. It's gotta be primary, cycle, super cycle. Yeah. Primary. We're gonna run with primary, cycle, super cycle. Primary, cycle, super cycle. Primary, cycle, super cycle. And let me make that bigger. I know that it's hard to see. I keep forgetting. I didn't do this analysis with like, but yeah. And just so I remember, I'm gonna call this cycle. Primary super cycle. We're talking about super cycles. That's a super cycle. And this C is part of the cycle degree. And then this guy right here, it goes 1 wave degree down, making it primary. But primary is not annotated like that with a 0. That's my thing, is that that's not right. Oh no, it is. That's right. Okay, don't worry about it. Everything is fine and under control. So 3 and then 4, and then I'm looking for super cycle wave 5 through all of this. And do I get it is the question. And so let's figure it out. 5. Okay, so I was looking at this being wave 1, maybe? This can be 3, this can be 4, and this could be 5 through here, and that could be motive, and that could be, this could be A, and this could be B. Yes. Okay, so we're gonna get rid of that, and I don't think I want to necessarily get down to the primary. I want to stay maybe at the cycle degree. I'm looking for I was looking for A, B, and C right here, right? Because this is 1 right here. Okay, and I think it's that one, right? I think it's that one. Duplicate, bring this down here for 2. And then we start wave 3. 3, 4, 5, 3. And this is wave 4. Yeah, we're gonna keep going. We're gonna keep going. That's top of wave 3 right there. then, yeah, it's important to know that wave B can set a new high because wave 4 cannot pass through wave 1. And if the top of wave 1 is right here, then we're coming down for wave 4. We can't go below there. We obviously passed a peak, but that peak was B. So it's allowed. And we'll make sure to mark this as 4. And then 5 extends a lot. 5 can stretch out. I think that's what we saw. I think we saw wave 5 stretch. And we'll have to pinpoint exactly where it ends. It's easy just to go to the high over here, but we know we can't just do that because we've seen wave B set new highs so often. And so we'll actually have to go into a smaller wave degree. Unfortunately, let's go ahead and duplicate something of the smaller wave degree. Let's just start counting it. Let's use my brain. I think goes Roman numeral and then... Okay, then we'll edit this. We'll make it big so everybody can see it. And we'll label this first one with primary on it so you know what it is. And it's huge if I do that. Do it like this, make it a little bigger. Those little less... doesn't help. Doesn't help. Just gotta delete it. It's fine. If that's 1, duplicate. Can this little itty bitty thing in here be 2? Possibly. If we look at the RSI for clues, i.e. divergences, we get a pretty big one there that breaks. It could be a third wave extension. Very well could just be a third wave extension. If it's 1, 2, let's see here. A, B, C, 4, 5. Ooh. I've got to figure out. I have to figure out where the end of this correction is. And so away we go. Is this 1, 2, 3 for A, and then B up here. And then we'll see if our Fibonacci extension makes sense there. It does. Makes a lot of sense. We're gonna go ahead and color code it and leave it there on the chart. That could be useful info for the future. The only point of this was to establish that it was like a rational, realistic target to have. Wave C occurring in 3 waves here. 1, 2, 3. 1, 2, 3, 4, 5. Yep, 1, 2, 3, 4. Gets weird. Yeah, it's probably a complex double 3. Probably a complex double 3. And it is sharp. We'll just annotate the sharp note. More information is good. It's very good. I'm gonna go ahead and save it. Duplicate. Pull this down. Edit. Make it C. All right, so we know that we are actually looking at wave 1 now. And we'll just kind of duplicate the other wave degrees that we're gonna be charting here. And leave them out to the side for future use. Okay. All right. Now, let us begin to break it down. 1. All right, so this gets hard. There's a corrective trend right here at 47.66. What is it though? Is it 2? Is it what? And so I have to figure out which of these waves up makes sense to be wave 3. Wave 3 can't be the shortest wave. And so if I do the Fibonacci extension from the bottom to this first peak, and then my next peak is below 100%, I run the risk of saying that this wave 3 is the shortest wave. So the way I check now is to actually see if this wave over here is taller than the next wave. And it's not. So this definitively here can't be wave 3. It has to be part of wave, oh my goodness, 1, 2. It has to be, this has to be the beginning of, it has to be the beginning of a third wave extension at the intermediate degree. So we go 1, 2, and then we start wave 3. 1, 2, 3, 4. Okay, and we're in a wave 3 at the intermediate degree. Now we're gonna start a 5 waveform. Oh my goodness. Look at all that drop. Okay, A, B, C, and then 1, 2. We'll take it. Okay, you can do this, brain. 1, 2, 3, 4, 5. And then this is, there is no way that there is another motive trend in here. But it's that 5th wave stretch, right? Of 3. Of 4, of 5. Wow. Oh my God. How do you make this motive? If this can't be wave 3, it must be 1, 2, 1, 2, 3. Oh, 4, 5. Is that it? 1, 2, 3, 4, 5. And that wave 3 truncates. A, B, and C for wave 4. 1, 2, 1, 2, 3, 4, 5. 4, 5. What if it's 1, 2, 1, 2, 3, 4, 5 of 3, and then A, B, C, and then 1, 2, 1, 2, 3, 4, 5. 4 happens through here. It's A, B, C, A, B, C, 4, 5. Coming in through here. Oh man, that's wonky. Let's get out. Okay, let's zoom out a little bit. Okay. That's a big wave 1. That's a big wave 1. 4 sharp. 5. I have the degrees wrong. I have the wave degrees wrong. That's 1. A, B, C, C. Shoot. It gets so complicated through here. If that's a motive wave. Is that 5? Is that it? 1, 2, 3, 4, 5. 1. It can't be right. So these are mislabeled. Okay, so I'm gonna recycle my wave here. Oh, can that actually be wave 5? This looks like wave 4. It can't be wave 4, because if that's wave 1, if wave 1 peaks out over here, this can't be 4 or 5. This is what my gut tells me. My gut says, hey man, that's an ending diagonal through there. Or not. Could it be? That's wave 5? Yeah, wave 5 has a small narrow to it, a small taper. And then we get A, B, and C. Okay, if that's true, this is 4. And so if that's 4, then that's the top of wave 3. That has to be the count. 1, 2, 1, 2, 3, 4, 5. 4, 5. Stretching 5th wave. And then, geez, but then, okay, so for this to be true, wave 3 here can't be the shortest wave. And so we measure it, totally the shortest wave. Oh my god. In my SPY analysis, I didn't make this wave 1. I made this wave 1. Could that be true? This has to be ABC. Let's see. And that's why I said, I was like, this doesn't look motive. This doesn't look motive at all until we get right here. Then like, this looks suddenly very motive. Is that what's going on? 1, 2. Oh yeah. That makes so much more sense. Yeah, and then, okay, and then this is bigger, so this can be, and it's motive, right? So we'll just kick out this. 1, 2, 3, 4 flat. 2 sharp. Perfect. We want to see the alternation like that between sharp and flat and 2 and 4. And then 5. Yep. We did it. Get rid of this. Get rid of this. Get rid of this. Get rid of this. Zoom out and ask, what did we just complete? This looks okay. Can't move this that way. What we just figured out, we'll get rid of this other one that's kind of lining up the charts too. Just figured out 5 at the super cycle degree. And that's exactly where we need it. So the thing to remember here and to stick by and to double down on is that everything here relies on one thing. This count makes sense as long as in this portion of the chart specifically, this low to this point here, this is not wave 1. It's tempting, right? But it's A, B, C, 1, 2, 3, 4, 5. So this is probably C of a B wave, okay? This is B of a B wave and A of a B wave. So this is probably, because this is going to be C heading up. No, it's 1. So this has to be C. Oh god. C going down. So looking for an A wave going down. So A, B, C. Wow. Yeah, right where I had it. A, B, C. But the extension tool is actually not being used that way. I'm just going to change the extension tool here so it makes sense. Yeah, A, B, C. We still could have used the property here of the Fibonacci extension principle to get the target for wave 1, which is kind of cool. But if that's true, if that's A, B, and C, that has to be terminating. That has to be wave C. Does that check? A, B, C. So this is a motive trend A. This is B, and then A, B, C. Yeah, that does fit. It fits. Do I annotate it correctly? Let's make sure that happens. This wave A goes down here. Right? Oh, shoot. That has to be wave C. It is C. Oh, and it is labeled there. Okay. A, B, C. Oh, my God. Conflict zigzag is causing me so much pain. A, B, C. Okay, so wave C. This is C. And then this is C of B, B of B, A of B. A. Wow, that's complicated, which means something could be wrong earlier on in my analysis here. We gotta figure it out. So what am I saying? I'm saying A, B, C, W, A, B, C, X, O, A, B, C, Y. Okay. 1, 2, 3. And then 1, 2, 3. That's a B wave. So, oh, we're looking for a C wave. 1, 2, 3, 4, 5. Oh. Oh. Well, that's easy. That's just a C wave. It makes like a, it appears like a triangle. Can I get some wicks in here? Will that help me? No. It won't. Go back to line chart and 1, 2, 3, 4, 5. I see 5 waves of sideways grind, which I can characterize as wave C. Is it actually backwards? No. It's not actually backwards. It's just a complete A, B, A, B, C. Why not? A, B, C, and then C. It could be 5, 3, 3. I don't know how I think about that. The point is that I can get a correct number of waves through here to complete like another set of 3 corrective like trends. The precise count is so hard. A, B, C. So this is A. So this is A. But it's actually, I'm actually counting that as C. A, B, C. Very complex. A, B, C, B, C, no, C. 1, 2, 3, A. Yeah, that didn't really end right there. This is an A wave. All right. So we've got 5 down through here, creating A, which means this is not B. This has to be C. See how this works? We just can't kick back. C is up, B is down, A, B, C. A, B, C. A, B, C of B. A, B of C. So what was I thinking? I was thinking 1, W, 3, connecting to 1, 2, 3. Connecting to 1, 2, 3. I'm gonna have to recount this once I understand the annotation. Without my book, it's very difficult. So I'll just draw lines on the chart here for you. It's 1, 2, 3. And then it's 1, 2, 3 ends here. 1, A, B, C. How do we do that? 1, 2, 3, 4, 5. What am I missing? 1, 2, 3, X. Could be that we have another 1, duplicate 2, 3. Whoops. Oh no. Zoom back in. 1, 2, 3, 1, 2, 3. One, 2, 1, 2, 3. It can be done. It can be done, and I'm gonna color this differently, just like so we can get some different like understanding. We can separate the sets of 3 waves. Oh, whoops. But do it correctly. 1, 2, 3. 1, 2, 3. Then back into the yellow. 1. A, B, C. Confuses me. Duplicate. And that could be 1, 2, 3, 4, 5. Perfect. Perfect. So zooming out a little bit. Yes. 1, 2, 3. 1, 2, 3. And then A, B, C. And then 1, 2, 3. There it is. So that's a triple 3. It's a triple 3. End of story. I have it written right here. I already figured that out. It was a triple 3. Ah. Of course I did. Of course I did. Okay, and I did all of that just to demonstrate this would be 1. So the rest of the chart makes sense. To go 1, 2, 3. And this is like 4. See B of wave 4, setting high 4. And then 5. And then what? And then what? And I'll tell you exactly what. A. A. B setting a new high. Yup. And this was the entire point. Just like in 1928, when the high was set in December, which was not the overall high of the market before the big crash, we're looking at that high occurring in December of 2024. And I'll be damned if we got another high in the same time frame. Yeah. So, what would that look like if we had the same like amplitude? Give me max available. Now we're gonna go back and we're gonna look at, wow, 1979. Keep going, keep going. This back here. See, it peaked here and then it continued, and it had a sharp correction, and then it continued to run up into 1929. And we're calling that an irregular top. And then doosh. And look at this insane rally, right? Insane rally. Just accelerated. Like the trend through here is so sharp. It's like there was an uptrend, you know, and it was great, but it wasn't like that sharp. Now let's go back to the front end of this thing. 1979, 1995. Let's go back over here. It's like, we'll zoom in. Top, little sharp correction, big bounce, and just like a face-splitting rally. I think it's the same. I think it's the same. I remember thinking that like this was the top back here, and then I was like, oh, it was just wave 3, and I've still got to wait for wave 5. And I thought wave 5 ended, and I was really confused, but now it's coming clear to me what happened. A, this is B, and we're waiting for wave C. Wave C going down. And who knows how low wave C will go? There's like a theory to measuring the amplitude of these things. You know, if you look back here, this is a pretty interesting shape for a chart to form. You got these like widening swings up and down, where each move is like bigger and bigger and bigger. This was 2017 through 2020. Yeah, this is Trump presidency. And guess what? We're back into Trump presidency again, and maybe we get the exact same pattern. We'll call this one the Trump. Just these wild swings. Oh my god. Yeah, why not? Fuck it. Wave 5 correction is supposed to move into the territory of wave 4, if I'm not mistaken. So yeah, that puts us below 47.66. Wow. Can you imagine? Now what to do? So this is an ultra pro short S&P 500 ETF. It basically, I used to have analysis on here. It's done some splits and such. So the chart drawings don't make sense because the price has moved. But this is what I'm saying is this is an inverse of SPY. And when you look at this chart, it really checks your bias against the overall S&P 500. Because if you see this much volume coming in, pumping in towards a low like this and price stopping to move, guess what? This is a high volume bottom. And if you're looking to buy and you're bullish, you would buy the living hell out of this thing. So if the markets do crash, I have to sell Playboy. I have to bail because it's not going to work out if the market's crashing. If the market's going to crash and make a huge correction, this is where I'm going to go. I can hold these shares without actually shorting the market, which is nice because you have to have a margin account to short the market. So in this way, I can use a cash account to go long on shares on this ETF of a short position instead. That's what I'll do. Oh, and it's leveraged. So what that means, it's supposed to make bigger moves than the actual market. This thing is going to explode. Look at it go. It's starting to form this bottom. Oh my goodness. I'm gonna do it. I'm totally gonna do it. Yep. I'm gonna do it. Let's figure out where the downtrends are. That's the big one right there. Let's go max available here. Time frame. Max available. Awesome. So we got max available. Can I get weekly? Oh, wow. You may be wondering what the point is of an equity like this that only goes down, and the answer is hedging. This is like an appropriate way to hedge a position. And if you're just like going to be hedging against, like, you know, the end of the stock market as we know it, that's what. Oh yeah, this is juicy. Enhance. It's got a falling wedge vibe to it, doesn't it? Ugh. Show me just this much. Make it steeper. Damn it. It's because I'm in log scale and does that. I don't like that, actually. Not a fan. But what am I looking at? Let's see. Let's take here. Price target negative. So we'll do 50%. Negative. I love that. 1, 2, 3, 4, 5. A, B, and C. Yeah, this thing. What are we at? 50? What's that? 133? I should probably zoom in a bunch there so you can see this too. Basically what I'm doing is I'm looking at this high and this low, and I'm saying, all right, so can we go see the high back in 2024? Probably. And if we do, that's a huge move. It's a huge move. Let's look at the daily chart. Let's turn on candles too. Yeah, it's just the opposite of SPY. God, I want to know how the markets are going to open on Monday so bad. It's going to be a total shit show. This is the level to watch, right? We'll say right there. Around $50. $51 probably proper. We'll make it 51. That's actually where we want to buy in. And like knowing my luck, we'll open up here and I won't know what to do because it'll be like, it's above my target and it'll probably come down. Oh, I bet you the market gets a rug pull. The market gets a big rug pull. So basically everyone's expecting the market to dump. So it does in pre-market. And then it rallies off of the open because it's so low. Wow. One thing at a time. We need to see what happens. This is just as uncertain, of course, as SPX, right? It's the same pattern. It's just a bunch of congestion up here. But I really do think we're going to go down. That was before the news. Anyway, I just wanted to get those thoughts out there. I'm very concerned because Playboy is like at my stop loss. I held because I was optimistic, right? That we're seeing the end of this downtrend, but God, that $1.50 looks a lot more certain now. It's so dumb. It's okay. March 12th is in 2 weeks. So if I have like 10 more candles of pain, I'm going to sell out, obviously. If I have to wait, I will. It's not a big deal. It's okay. I'll be all right. I wonder what the beta is on this. Beta refers to the impact of like how much does the stock correlate with the general market. And I used to know where to find this in Thinkorswim. I no longer do. So you can't see this, but I'm clicking around in Thinkorswim. God, I wish I could see the beta. Beta is a very important thing right now. Is it gonna be in... I wonder if it's in like... I wonder if it's in the options chain, maybe. Okay, can we just like... VWAP right now is at 193. So we're just a little below volume. I don't see this. I do want to figure it out while it's on. That's it. I'm asking the chat bot. What is the beta? PLBY. See if it knows. See if it can figure it out. PLBY's current beta is approximately 1.91, meaning it moves almost twice as volatile as the overall market. This value comes directly from the latest structured market data. Right. Of course, the big price swings lately. This means, okay, with the beta near 2, PLBY firmly is in the high volatility microcap category. Large swings, amplified reactions, high sensitivity. Yeah. Attractive traders, but structurally risky for long-term stability, of course. Yep. So beta is pretty high. It's very volatile. So like if it does crash, it crashes hard. I should have sold on Friday. I know I should have. I fucking knew I should have. I don't have to take a loss either. I can just hold. The strategy is long-term accumulation so I can sell calls in the future. That's the long-term goal. It's not to trade, not to swing trade. It's actually just to build the position up and then sit on that and wait, and then I'll be fine. But this is very frustrating. Anyway, that's all I really wanted to do. Just wanted to get all those thoughts out there because I was just having like this wave count in my head, and it was like I was looking at it in my brain all day, and just wanted to note it down. Big crash time. Anyway, all right. Happy trading.